Yo, what's up? It's J2O, man. We out here. About to do a reaction video. Two for the price of one. That's how I do it on this channel. So I'm reacting to Hunter FX video with Rayner Teo strategy improved. So let's see what he thinks and I think. So let's get it.
Hey friends, hopefully that's a hint for you guys as to what this video is going to be about.
I guess Rayner's signature line is, hey, my friends. But yeah, let's get it.
That's right, I'm going to be finally reviewing one of the top dogs. This guy's been around for I don't know how many years, 5, 6, 7, something like that, and he's got a massive following. So I want to actually look at one of the strategies that he's been diving into, one of the strategies that he explains on his channel. And I know this video was made a little bit a while ago, but I think it might still apply. I think it might be really useful. I know a lot of you guys like this guy, so hopefully I don't make fun of him too much. So let's get into it. Alright, so guys, first of all, this strategy is called the best Forex trading strategy for beginners. So if you are a beginner trader, I guarantee this is going to be the best one for you in 2020 at least. In 2021, it's not going to apply anymore. You're going to have to find a new strategy if you're watching this in the future. I'm sorry, but this is the best one for the next 6 months, and then you're going to have to scrap it. Let's jump into it.
What's up, my friend?
What's up, my friend?
In today's training, you'll discover the best Forex trading strategy for beginners. And here's the thing, right? This trading strategy, it doesn't only work for Forex, it can be applied to stocks, the futures market as well. So this trading strategy is what I call the BWAP trading strategy. BWAP trading strategy.
I like it.
So before I explain to you what this is about, right, I want to share with you the criteria, right, that went through.
So a quick note, like Rayner's video, he always had like PowerPoints and very informative and stuff. So definitely check it out. He has like I guess Telegram, so check it out. He sends a lot of information, very informational. So check it out.
Through my mind before I decided to share the strategy with you. Number one is that this trading strategy, the pattern has to be easy to spot, because new traders, right, beginners, they are not familiarized with, price action analysis, chart patterns and stuff like that. So I made sure that this pattern is relatively easy to spot. So for new traders, right, they are able to, to catch this. Number two, there must be a sound logic to behind why this trading strategy works. In fact, for all strategy, right, there must be a logic behind why it works. If not, right, you won't have the conviction to trade it. And number three, this pattern, right, this BWAP trading strategy, it must take time, right, for it to happen. Meaning it takes time for the pattern to form. If it forms too quickly, beginners, right, they won't be able to catch it in time. They'll be too slow to react. So I made sure that this trading strategy, it takes time to form, so new traders, they can catch it as well.
First of all, I'll say that actually he's going about this in a very strong analytical way. It's very sound how he's thinking. He's specifically trying to design some sort of variation on a strategy that he already knows, but put a beginner spin on it. And the idea that he's saying that has to be very easy to spot, a lot of the trading that I do is much more advanced, and there's much more steps to it, and that's going to really confuse a beginner jumping into it, but he's trying to come up with something that's just kind of a very simple, do this when that happens, a very easy to follow. You don't need to know much, and that's really cool. It's a question of whether or not this is actually going to be a strategy that works.
Okay, let me comment on this. So yeah, there's like so many different strategies, and I feel like the more you trade, the more advanced you can make your strategy due to experiences in the market. But basically what he's saying right now, it makes sense depending where you're at in your trading. And at the end of the day, as long as you could be profitable and know when to use it, you should be all right.
So the BWAP trading strategy, right, the long setup, right, goes something like this. The market is in a range, and ideally you want 80 candles or more. So don't have to be too, anal about this. If you get 77 candles, 75, it's fine as well. But generally, I just put here 80 candles or more.
A big
the more
chunk of candles.
The longer the range, the better. Number two, the price then approaches the highs of resistance and then forms a tight consolidation, otherwise known as a build up, right? So this is what I'm looking for, a tight build up at the highs of resistance. Number 3, I want the 20-period moving average to touch the lows of the build-up to signal to me, right, that the market is about to make a move higher. And number 4, I place a buy stop order above the highs with a 3 ATR trailing stop loss. So if you don't understand, all these technical terms, don't worry, I'll share with you a ton of charts and examples, cherry pick ones, okay? I cherry pick it because it's much easier to illustrate those examples so you understand what
That's fair.
This means.
The cherry picking is perfectly fair to explain how this is actually going to work. This strategy is first thought it's going to be a breakout strategy, but it's going to be it's really showing that the market doesn't want to just quickly wick and then back down. So I think his logic behind this is basically that if it consolidates before breaking out, it's less likely to be a sweep and a manipulation of the stop orders and of the breakout traders and then reverse back into the trading range, which it's a very sound idea. I've never actually experimented with something like that. So this is quite interesting.
So as a rough idea, right, let me just sketch you how it looks like. So market is in a range over here, ideally about 80 candles range. Then it comes up to the highs of resistance and form a tight consolidation. So this one is what we call a build-up, or what I call a build-up. Then you want to let the 20-period moving average, which is this line over here, touch the lows of the build-up. This signals to you that the market is now getting ready to break out. Then when that happens, you place a...
So I want to say that I don't think the moving average really matters here. He's just using it as a duration of how long it should basically be ranging for or building up for. I think it basically, as long as it builds up, the moving average doesn't matter. It's just kind of I guess it's easy for beginners to spot. Okay, that makes perfect sense.
Yeah, some people use moving averages as support. So obviously, if this was a moving average, it would be used as support. I think that's what he's trying to say in the strategy.
The buy stop order above these highs, just above the highs of resistance. And if the market breaks out, you go long with a stop loss of 3 ATR as your trailing stop loss. So I'll explain how that works with a few charting examples. But first, right, the short setup is just the opposite. Market again in the range, 80 candles or more. You want the price to approach the lows of support and form a tight consolidation. Then the 20-period moving average, it touched the highs of the build-up. And then when that happens, you place a sell stop order below the lows with 3 ATR trailing stop loss. So why does this trading strategy work? All right, so let me explain to you a few reasons for it. The first one here, okay, let me just draw this again.
First of all, before he jumps into why the ATR trailing stop works, I'm going to tell you why I don't like it. At any point, the market could move in a large move, and if it doesn't create a base and then move to the next level down, then it could easily come back all the way up and stop you out at any point if you've continued to move your stop lower and lower. So you're actually very, very likely, if you're using a trailing stop, to get stopped out. And then it's going to continue back in the direction. The more ideal way to do this, and I think he's only doing a trailing stop because it's easy for beginners, but the better way to do this is wait for bases to form and then new levels to break, and then move your stop behind those new levels, those new bases, after we've moved to lower lows or higher highs.
Hey, I'm Marquet Latimer. Look, if you don't want to be like one of my trading students who are making...
Okay. So when the market consolidates at the highs of resistance, this is a sign of strength. It's telling you that there are buyers willing to buy at these higher prices. Okay,
and one more thing, like even with the strategy, there's no 100% perfect strategy. So even though has a strategy, the BOP strategy, whatever it's called, it's still not perfect. There's still flaws, but it can work a good percentage of the time due to certain market conditions where he's trying to explain right now. So let's see.
It's a sign of strength. Or number two, it's telling you that selling pressure has difficulty pushing the price lower. Maybe there's a lack of seller. So whatever the case is, right, this is a a bullish factor in your favor. Number two, the volatility cycle is in your favor as well. So I'll explain what this means. So here's the thing, right? The market, right? Volatility in the market, it's always changing.
Yeah, that's
Volatility
true.
is not
Especially
static.
different
It's
session
always
changeovers.
moving from a period of high volatility to low volatility and then back to high volatility again. So you can imagine this, that when you are entering your trade in this build-up environment, this is in a low volatility environment. And when the price breaks out and if volatility expands, right, what does that mean for you? That means that your risk to reward on the trade could be pretty darn favorable. If volatility expand, right, you can see that your risk to reward is pretty darn good over here. And this is what I mean by the volatility
In this
cycle is
case.
in your favor, because you're entering in a period of low volatility. And a third thing over here is that there is a logical place for you to set your stop loss. You can just set your stop loss below the lows of this build up over here, right? Just someone.
But also, it could potentially hit here and just come back down. It'll be a loss. But in this case, I mean, low volatility, the build up, it was a breakout. That's ideal, what you want, but sometimes it doesn't go like that. It could literally just come up, fake, and come back down. So I'm just gonna be mindful.
About here.
Have good risk
There's a
management,
logical
you be
place.
okay.
Compared to a trader who trade breakout, let's say a trader who trades breakout, there's no build up, he just simply buys this breakout over here. Where are you going to set your stop loss? If you ask me, right, the
True.
logical place, the nearest one is below this area of support, and it's pretty darn far away. Okay, so
It's
this
actually-
is why this what
That's actually not, if you're smart enough, a logical place, simply because that's where everyone else's stops are going to be. So the market makers know your stops are going to be there. So it actually makes more sense to put it elsewhere, because then you're not going to be part of the school of fish who gets stopped out when it's manipulated.
trading strategy works. And what does what?
About stop losses, ideally you should put it below the structure of support or resistance, wherever you're trying to do. In this case, you put it below the support, and ideally the market makers, they do try to stop you out. So you just got to decide where. And in the day, you don't want to like risk too much trying to make sure you don't get stopped out, you know, because let's say you're trying to put it all the way down here. Clearly the trade is wrong and it goes all the way down here, so then you risk too much on your account. So just be mindful of your stops and how much you're willing to risk.
What stand for? It stands for breakout with a build up. Okay? A breakout with a build up trading strategy. The what trading strategy. So let me share with you a few examples so you know how the what trading strategy works.
I'm gonna cut this video short.
And by the way, right, if
showing
you
guys
are
a few,
enjoying this content so far, hit the thumbs up
suggestions of what I
button.
think of a
And
strategy.
if you don't enjoy it, right, then subscribe to my YouTube channel.
Do it for me
So
too.
first thing first, if you recall, we are looking for a range, a minimum of 80 candles, 80 bars.
let's
So
see what
use
he's
this
talking
tool
about.
over here, just plot it from the start of the range all the way. And you can see that right now it has about 83 bars over here.
Okay.
Okay.
Oops, it's gone.
Okay.
Just do that again.
It's ranging.
It's about
We
80.
see it.
Okay, if you see
Range
the
might be
red
used
color
to
box,
set
there's about
consolidation markets.
83
I don't think you need to
bars
count them.
right now. Okay, so that kind of meet our criteria. So
But
where is the
ranges,
highs of
okay.
resistance? So again, use your tool, horizontal line. I can draw this area of resistance over here. And the
Okay.
price, what is it supposed to do after that? The price to approach
okay.
resistance and then to form a build up. So once it
Okay.
formed a build up, what's next? We're looking for the 20 MA to touch the lows of the build up. So we just pull out our 20 MA, and you can see that over here, right, the 20 MA has touched the lows of this build up, and it
So
seems to be,
this-
supporting this
Looking
higher
easy as
prices. If you just
support.
zoom in, right, you can see that right now the price, seems to be supporting,
makes
right, kind of
sense.
supporting these higher prices. So great. So now our third criteria is met. The fourth thing to do is to place a buy stop order above this highs over here, the highs of resistance. And finally, we have a 3 ATR trailing stop loss. And you can use this indicator called the chandelier stop over here. Let me just remove the
Yeah, there's so many different
TMA,
indicators
which
out
is, you
there.
see this,
I try
this
not to use
purple
a
and
lot
blue line
because
over
you don't
here.
want to
This
get
purple,
confused.
this blue line. So how this works is that this is actually a variation, right, of the ATR indicator. So let me explain. So this one, the settings for this chandelier stop, right, after you place a buy stop order, you enter the trade. How do you manage the trade? Where is your stop loss? This is where this blue line comes into place, right? This is where our trailing stop loss is. So when the price closes below this blue line, we exit the trade. So the settings for this indicator is 122.3. You can use 123, it's fine as well. So ATR period is just simply the look back period. I mean the how many time period, right, that you want to use to calculate the ATR value. Whether is it the last 20 days, the last 22 days, it's up to you. The important one over here is the multiplier. I shared with you a 3 ATR because this would allow you to capture medium-term trend. If you want to capture a longer-term trend, you can just increase the ATR multiplier to like 4 or 5, whatever you wish. So how does this blue line move? That very simple, right? Let's say now this is the highest price over here. Okay, and if you pull out the ATR indicator, which stands for average true rate, it measures the historical volatility of the market. So let's say the ATR value right now is X. So what this indicator does is that we have a multiplier of 3. So X multiplied by 3 gives you 3X. Right? So let's say the current price now is, let's call it, I don't know, Y. Okay? So Y minus 3X, which is, and you only exit the trade when the price closes below the chandelier stop, which happened over here, right? This candle, it closes
on a breakout. So the market maker options for, okay guys, I think I know 2 better ways to do this. Let's look at it. Okay, so there's 2 better options for this in my mind. The first concern I see is that there are multiple tests of this level that he's drawn out as a high, as a breakout zone. So there's a lot of breakout traders similar to himself looking to get into this on a breakout. So the market makers, obviously, they know that these are where breakouts are going to be, these are where stops are going to be. So they're going to be incentivized to do these wicking type patterns like this, and essentially break up and then wick back down and stop you out. Similarly, some people might have been caught in this because it stopped a few people out here after multiple touches and then closed back below. This could have easily dumped back down right after that. It didn't have to break out here, but it happened to. That's the major concern here, and I don't breakout trade because that is extremely common. Extremely common. This is why he personally cherry picks things, because you're going to see that happen a lot of the time, and that's what's going to make you lose nearly all the time. That's what's going to be your losing case, your losing scenario. In a better case, if we want to then look at,
yeah, it's gonna be a comment. So yeah, I do see what Hunter's talking about, because there's times where you think it's gonna break out, but it doesn't. The candle is bullish right here, but then it comes back down and becomes a bearish candle and comes back down on you, or it comes back up and then comes back down on you, and then you get faked out thinking it's going to like break out because you want to catch a breakout. But I guess with Rayner Teo strategy, he has his, like, I guess you could say his buy limit pretty high, so it's like a new structure. So let's say it takes a couple of candles to hit his like buy stop or whatever the case is, then it hits it, obviously gonna come back down to test the area of support, because resistance now comes support, and then you could get a better entry and ride it back up. So I guess that's what you're trying to do with the strategy. But you gotta understand like how the market works when it breaks for a new high.
At this range on a lower time frame and look for that same stop hunt right here, for example. If you zoomed into a lower time frame and you saw a wick below that and stop out of these lows or these lows or something, then we can assume that the momentum is actually shifting to the upside, and then you can actually get in at a lower price and enter below the actual breakout, knowing that the momentum has immediately shifted and then gone into the upside. If you don't see that in this case, which you don't see, your next option is wait for the retest of that zone.
That's one way.
Untested order block right here, so it moves up, it doesn't come back until there. This is the first test of that block, right? because it'll always work in staircasing patterns, right? And that's the first test. So after it breaks out and it's confirmed that breakout with a closure of the candle, because notice how this one closed back within, but you see that closure, then you wait for the pullback into that order block, and then you go for the long. And this case, you would have actually entered right here on that perfect entry on that pullback. And that's
also to know, sometimes there's not a perfect pullback. Sometimes it'll break out and then you do want to enter here, but then it could potentially just, you know, come back down. You know, there's cases where it could do stuff like that. That's why you got to be mindful with your risks. But in this scenario, it worked out perfectly. It retested with a pullback and went back up. Just FYI.
That's just the case. Let's see if we can see that on some of his future examples.
Only exit the trade when the last trade, a concept. Moving on, one more example.
But yeah, that's pretty much what I see of a strategy. Overall, I mean, it can work. You know, no strategy is perfect, but you just have to have good risk management and know when to get out and when to get in, and you should be okay. And if you have any questions, just like, comment, and subscribe, and, you know, we could talk about it. And you already know we out here.